Good morning, traders. Steve Ganz here. So we're going to take a look at Snapchat this morning, and I apologize if I sound a little funny. I broke a tooth out last night, and going into the dentist to get it fixed, but it sounded a little funny in the meantime. Anyhow, so on this trade, if we take a look at a chart, we're going to see that Snapchat, while it was all over last night, if I take this down to a 1 minute time, well, we can go smaller than that. We can go 30-minute time frame. I mean, we can see it was all the way up at 12 and all the way down at 8.5 after earnings last night. But it's kind of settled out not too far from where it closed yesterday, which is great for our trade. So let's move this back to a 1-day time frame, and then we'll come take a look at our calendar trade. Again, our goal here is to have the volatility drop out of this short strike and have this become virtually worthless. We're going to see this drop in value rather significantly after the open today. Now, of course, our long is also going to drop in value, but there's only 4 cents difference between these two. That was kind of a key to get into this trade that kept this trade very, very low risk. So what we're going to look for here in about 3 minutes at the open is we're going to look for the volatility to drop out of this, and if this goes according to plan, our front period volatility is going to drop quite a bit more than the back period volatility, and this thing should have some decent profit in it shortly after the open. Now, again, the long is going to drop as well. So it's not, if only this front dropped and the long stayed in place, that'd be fabulous, but that's not what's going to happen here. So we'll take a look at this here in about 3 to 5 minutes after the open, and we'll see what happens on this. But my intent, if this were a live trade, would be to just close this thing, lock in my profits. So we'll be back in a few and see where it plays out. All right, bingo. So there we are. Now, it did open and it's running up on us. Okay, my goal would be to just close this trade out instantly. At a minute ago, this was at $100, so it would have been almost a 260% profit overnight. So let's just narrow our range down here so we can see what's happening. So again, had this thing open around 10 where we were expecting, which actually it did open there. I had this trade on personally. I've already been filled and I'm out on that trade. But now it is running up, but still has a really good profit in it. So let's look and see, why that happened. So I'm going to pull this down here. Shoot, I was hoping to overlay that. Maybe that's not going to work. Let me pause a second, see if I can find a way to do this. All right, so let's take a look at what actually happened here. This is the important part to understand, that when we sold these yesterday, we sold our short strikes for 80 cents, and today those are down here at 9 to 10 cents. So that's a huge profit in those shorts. Now the longs that we had to buy, we paid 84 cents for. Those today are at 22 cents. So they're still maintaining some of their value. They haven't dropped out as much as the others have, which is exactly what we're looking for. Again, these are our longer dated options. So let me rephrase that. These are our longer dated options, the further out ones. So normally they will decay a little bit less. And that's exactly what happened here. And it's this dynamic between those two that actually ends up then creating the profitability. So let me just turn off my drawing tool here, move this back out of the way, and we can see that's how we generate this profit wherever it happens to be right now. And this is actually pulling back a little bit into this zone. And again, had I not already personally closed this trade for a little over $100, which would be a 260% profit overnight, I could still potentially milk this. But for me, it's about getting in, getting out, and moving on. So that is the wrap up to this Snap earnings calendar. And again, it was great to be able to kind of model that out and show how these different volatilities would operate differently after volatility of earnings dropped out. So thanks so much, everyone. Hope you found this interesting. If so, please like, subscribe, leave me any comments or thoughts.